Good morning, traders. It's 8 a.m. Chicago time, actually 8:01. The minute just ticked. 8:01 a.m. Chicago time on Wednesday, the 27th of January, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not indicative of future results. Looking at the major products overnight to determine the overall sentiment. Oil is down 210 basis points. Gold is down 20 basis points. U.S. Treasuries down 40 basis points. Eurozone Treasuries are basically flat. Asian equities, the Nikkei is up 2.7%. The Hang Seng up 1%. Eurozone equities, the FTSE's flat. The Euro Stoxx down 59 basis points. DAX is down 41 basis points. U.S. equities down 25 basis points, and U.S. dollar index down 56 basis points. So it looks like money is is moving from the west to the east, so to speak. Strong Asian session, weak on commodities, weakening dollar. These are all things that are expected pre-FOMC today, as money is put into as money is protected into the announcement. Apple reported after the close yesterday, reported $3.28 versus $3.24 estimated, so it beat by 4 cents. The revenue number, though, came in worse at 75.9 versus 76.4. Its holiday quarter revenue came in at missed both analyst expectations and company guidance. iPhone sales also failed to meet expectations. They increased year on year, but only barely. And Apple's forecasting a decline, its first time ever on iPhone sales. The Federal Reserve will continue its two-day meeting and announce its latest policy decision at 1 Central, 2 Eastern today. Very, very important. The market sees no chance of a rate hike and just a 2% chance of a rate cut. China's Shanghai Composite fell to a loss of more than 4% at the midpoint of today's session, touching its lowest level since November of 2014. But a sudden dramatic rebound paced by large cap stocks lifted the index to a loss of just 0.5% by the close. So mid-session, it gained 3.5%. I tried to scour my news feeds for why that is, and I'm not able to identify why that is. I'm not sure if there's some sort of intervention there or what the story is. Let's have a look at our charts. My chart's currently updating for some reason. So this chart will disappear in a second here. Overall, yesterday, for those of you who are here, the expectation for yesterday was for it to open in range and push higher early to break the overnight high that we had at 80.75, and then to rotate down and take out that weak low at 1868. That was the primary hypothesis, which did not work out. It struggled for a bit. It tried, but it did not quite get there. Instead, I described Hypo 2, which is to test lower and then to push through to 1885, 1887 actually, and then to attempt to head towards 1900 and 1903. Not sure why my charts are still not responding here. I think it's re-downloading data for some reason. Must have found a bad tick in there or something. So yesterday's trade on Hypo 1 has played out perfectly. We still have the area of 1883 to 1881 as being a key area below us. It's a low volume node. And then yesterday we formed a new low volume node at 1887 that you'll want to that you want to note. Currently, we're trading 1890. 1890 is a high volume area. I've created several new composites. Here they are. So we have a composite from the low area from the middle of the month. That's at 1865. That was the target for Monday, and the expectation was yesterday we would open. Oh, let me change the color here. Let's do something. Let's do the white again. Normal. Expected it to open, test the overnight high, as I said, and then push lower and attempt at the 1865 area. That was our key goal. The 1865 comes from these multi-day composites here, all the way back to last Monday. That's basically the entire week's range. It's also the point of control left behind on Thursday. And the expectation was we would take out this weak low, this super weak low, and go to 1865 before chopping around and then deciding on the next move, which is likely to be higher. That was hypo 1. Hypo 2 was an early test lower, which is exactly what it did, and then a push through the resistance above that we set out at 1882, 83, actually 81 to 83. And then the expectation was for a pullback to that, and then a push through to the 1897 naked point of control, pullback, chop, and then ultimately take out the 1903 and start making its way to 1915. Again, 1915 being the most attractive price in this area. It is the point of control. When I remove the extension of these profiles, you could see that the point of control is up here at 1915. 1915 also gets carried over from way back, comes all the way back from back here. So the August-September high volume node, highest volume node, is also 1915, and it carries all the way across, and then it becomes the high volume node for the current area as well. This is not a coincidence. The market is constantly seeking balance. It goes from balance to imbalance to balance, but its purpose is to seek balance. Why does it seek balance? It seeks balance because this is the price at which the market does the most business. This is the price at which the most volume gets cleared, or buyers and sellers get matched, and that is the purpose of the market, is to match as many buyers with sellers as possible, and that's what we're here for. We're here to determine what the value of a product is at any given time, and if the market's away from that price or zone, really, then our advantage is to take a trade in that direction, and that's the whole purpose of this volume profiling. When I include yesterday's volume in this composite, look at what happens. The point of control moves from 1915 down to 1915 down to 1891 and a half, 92, or 1890 actually. And that's become now the key area to watch. So back to our 15-minute, our immediate action. We are currently stuck at this price. You can see the 1890 is the high volume node for the last 3 days since last Friday also. So it's the high volume node for the last 3 days. It's the high volume node for the last 2 weeks. There's a lot going on in this area, so we are trapped in this magnet area, and what that's likely to do, traditionally what that does is it creates a condition where the market just sweeps back and forth, because it is balanced, and then it'll likely take an attempt lower. If it has any intent to push the 1915 quarter, the point of control above, plus the naked gap, the naked close above, then it's likely to test lower, consolidate, and then get the energy to push higher. And that's what I'm expecting. Given the price action recently, there's basically an inverted head and shoulder kind of forming. Um, and so we have moved up, down, up, down. We found our buyers down here and we have pushed up, consolidated, pushed up, are consolidating, pushed down, pushed up again. So what we have is basically this market is creating an inverted head and shoulder for the break higher. And so this is what things look like now with the FOMC on deck, and the fact that things have been jittery lately in the markets, and it's unsure what the FOMC is likely to do. Um, that's going to change today. We're going to see today how that plays out, what the higher time frame is anticipating as far as what the next cycle over the next month is likely to be. But overall, today is expected to be very choppy. The way things are set up, the way the overnight session is set up, we're basically looking at a pretty choppy session. The overnight profile is very fat, very bulky, pretty low volume at 328,000. And the market's basically resting. And where is it resting? It's resting in the low volume node from the prior day. And it's holding above right now. So overall, as long as we stay above that 1882 area, that low volume node area, which is demarcated right here, um, then I'm expecting it to chop around on the open and then eventually make its move towards 1903, which is key above, and then 1915 as a primary hypothesis on the FOMC. If things don't go so well, then I'm expecting it to ultimately take out this week low in the day session, and that becomes my key target below 1865. Again, it's much more clear on this chart. The 1865, as discussed before, right here, this week low that we have right here, 1865. So that becomes my target for the FOMC if we see that the market has sellers in it on the announcement. But this morning, just pay attention. Overall, the composite in this area has a fairly weak high. I think the overall skew is chopped to the upside. Again, that is my primary expectation, the primary play. But if things don't go so well with the FOMC, depending on what is released, then I'm looking for 1865 as a secondary hypothesis. So I'm still short-term bullish on the most recent action because of how things are shaping up. Notice value is holding above. Value is up here on this day, up here on this day, up here on this day. It is holding higher prices quite efficiently, and I expect that that's going to continue. I expect this composite to be extended up and to become much more balanced before the next move as opposed to breaking lower. That's the probabilities play that way. As you all know, statistics and probabilities have their limitations, and ultimately we have to wait for the market to tell us what it wants to do before we jump in one direction or the next. Hopefully that was something that was that clears up the action for you a little bit, and something you can use for your trading today. As always, risk comes first. Make sure your risk reward is balanced, and make sure you're identifying and understanding the risk and respecting it so that you can trust yourself while you trade. If you do not respect your risk, you cannot trust yourself. And if you cannot trust yourself, you're trading with fear. Fear is a very strong emotion that does not serve you in trading. It is there. You cannot do anything about it. But the more you do what you're supposed to do, the more you're consistent about following your plan and being disciplined, the more confident you're likely to be, and the easier it is for you to see the market for what it is rather than what you want it to be and what you need it to be, because your focus shifts from protecting yourself from managing fear to moving towards actually seeing the market for what it is. Okay? Good luck today, and I'll catch you tomorrow. Take care.